Well, now that we know the background of socially responsible investing and we know what it's really about, what has it done? What are some of the successes? Well, there's an organization called the Social Investment Forum, and every 2 years they publish the report of socially responsible investing trends in the United States. Social Investment Forum, socialinvest.org. Very, very useful website. I encourage you to go take a look at it and poke around. Really good information. They look at the trends over time. Well, for the 2007 report, which is as to the end of December 2006, they identified 2.71 trillion, that's with a T, dollars under professional management in one or more of the three areas of socially responsible investing: screening, advocacy, and community investing. This is up from 639 billion in 1995. That is a 324% increase in 12 years. So it is growing. Nearly $1 in $9 was invested in SRI portfolios. That's 11% of the 25.1 trillion total dollars in investing, professionally managed investments. 11%, $1 in $9 is an SRI in 2007. Socially screened mutual funds grew from 12 billion to about $172 billion in those 12 years. That's an increase of 1,425% in 12 years. That's outpaced the growth of the entire mutual fund industry in the U.S. The rate of growth is much faster. It's still a small percentage, but the rate of growth is much, much faster. From 2005 through 2006, a 2-year period, the end of 2006, professionally managed SRI grew by 18%. All professionally managed assets grew by less than 3%. It's in the last 2 years. Shareholder resolutions grew by 57%, and community investing grew by 32%. That's just in 2 years. Okay, now what are some of the things that are being done with SRI? Okay, what are some of the actual achievements, so to speak? Well, shareholder resolutions is one of the biggest areas for direct impact. A current one is what they call say on pay. And basically this is shareholders want to express concerns to the board about these huge pay packages that may or may not have anything to do with financial performance. They want to be able to challenge them. And so far, Blockbuster, Intel, Ingersoll Rand, Motorola, and Verizon have adopted these. And there's over 100 companies that has this resolution before them for this year's proxy season, 2009. So that's an area that's getting a lot of attention. In 2003, a utility known as American Electric Power received a resolution from the state of Connecticut. The resolution asked them to consider the economic risk of carbon dioxide and other emissions. Well, the resolution won 27% of the shares voted for it, which is the highest for an environmental issue at the time. In 2004, they put together a task force. The board had a task force, subcommittee of the board, to focus on climate change. And the results that they published from that task force has now had other shareholders in other companies get these same resolutions before the boards of those companies. So that's had a major impact. Other areas include resolutions for toxic chemicals, sustainability, non-discrimination, oversight of political contributions, lobbying, animal testing. Some more recent examples are predatory lending, predatory credit card practices have really sprung out in the last year or so, and greenhouse gas emissions. Community investing focuses on subprime mortgage situation. Now, we all kind of know that one of the biggest impacts, one of the biggest areas that impacted the current financial crisis came from subprime mortgages. Basically predatory loans. People were sold a mortgage with a teaser rate, and then the rate ballooned up and they couldn't afford their mortgage. A huge percentage of the foreclosures are in that group. Well, that's what we call predatory lending. And SRI advocates have been dealing with this issue since the 80s. I first heard about it as being a major issue in 1999. Now, mortgage collapse largely came from this, not solely, but largely from this. Earlier I talked about community development financial institutions, CDFIs. This is one of the things that they do, is they go into these communities and they do mortgages or set up mortgages for people the right way. Appropriate lending and investment products, foreclosure prevention counseling, financial training programs to educate borrowers on the abusive lending practices and their legal rights. So there's much less of a tendency for people to get involved with these types of mortgages.